Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1612A, and today's date is July 10th, 2018, and the title of the episode is, The Economy Just Hit the Wall. Everything is about to change. Let's get into the economic collapse financial news. Now, yesterday we talked about how the Brexit plan isn't going the way everyone thought it was going to go, and two people resigned already, Davis and Johnson, and now we see more individuals, they decided to resign. Maria Caulfield and Ben Bradley, they resigned on Tuesday because of Theresa May's soft Brexit plan. And Caulfield went on to say that I cannot support the direction of travel in the Brexit negotiations, which in my view do not fully embrace the opportunities that Brexit can provide. Bradley also wrote a very similar letter. And we see at this point that the central bank establishment, those people who are not elected, those people who want to keep this all together, they are going to do whatever they can to try to keep it together. And this is why it's been taking so long. And this is why we're not seeing the outcome that we thought we were going to see. And these individuals now are saying, okay, we see the writing on the wall here. They are not going to move in the direction that we would like. And everyone is jumping ship at this point. So we're going to have to see what happens, and we'll have to see what the people of the UK do at this point, because, again, they voted to get out of the EU, and it is not happening the way they wanted. They maybe they'll remove Theresa May in the end of all of this. We'll have to wait and see. But, again, the people do have the final choice on what they want to do here. We see here in the United States, what is happening is they're releasing ridiculous data. We know that the unemployment numbers are completely manipulated. We know that job openings, that they keep saying there's so many jobs out there, we just can't find anyone to fill them. We know that's ridiculous, and we're going to show why it is ridiculous. But when we look at this, we can see that they're telling us people are quitting their jobs because they can find better jobs. Well, nobody just quits their job and then goes out and looks for another job. If you have a job, you go and you look for another job that maybe will pay you more money. And then once you have that job, you quit. So this idea that everyone is quitting because there's so many jobs out there is absolutely ridiculous. And the idea that there's so many jobs out there and they can't find qualified workers, that is also ridiculous. Actually, when we look at the job hires versus 12-month cumulative change in payroll, we see the same thing happen that happened back in 2006, 7, and 8. Everything is starting to roll over and things are going down the other way. Now, we understand that the American population, they are at their limit right now. And we can see from the consumer credit that has exploded much, much higher right now. And we're much higher than it was back in 2008, and it's continually moving up because what is happening here is many of the individuals, they can't make ends meet. So what do? You use credit cards. And today, people can't survive without credit cards. Remove all credit, remove all personal loans, remove everything. Try to survive on your salary, and people will find that it is very, very difficult to do so. Paying your rent, paying your car, paying everything with cash. And this is why they needed to come up with credit to make you feel like, oh, I can go out and purchase something. And this is why they keep saying, oh, look, the credit has gone up. People are more in debt. This means the economy is doing well. No, this means the central bankers are doing well. It means the economy and the people, they're going further and further into debt. We see BMW, they decided to leave South Carolina, and they are now making a deal with China. And of course, they're blaming this all on the tariffs and things like that. And they're moving their manufacturing out of the States. So BMW, they are the largest U.S. auto exporter and employs around 10,000 people at a plant in Spartanburg, South Carolina. The brand's key SUV models are produced there. And they signed an agreement with a Chinese partner, Brilliance Automotive Group Holdings, and it looks like they're moving the manufacturing out of the States. Now, again, manufacturing has been moving out of the States for quite a while. And to start bringing back manufacturing out of the blue is going to be very, very difficult. And this is why it's not working, because the deep state, the central bankers, they spent a very, very long time moving everything out of the United States. And to try to bring everything back within a year or two, it just wasn't going to work. You're going to have to change a lot of laws, change a lot of taxes, change a lot of things to allow these corporations to come back. And at this point, it's not going to happen, not in this short period of time. If we shut down the central bank economy and get rid of a lot of these laws over the many, many years, yes, a lot of these manufacturing companies can come back to the United States. But when we look at the real data here in the United States, the economy hit the wall already. And this is why we've been tracking all of this. We've been tracking how the economy's doing. So when, presidents come and go and they tell you that, the economy's doing poorly because of this person, we understand that this is a lie because we know what's been happening. Now, the average consumer, as we know, they are forced to use their credit cards to maintain their current lifestyle. Because as we know, as inflation hits and salaries, they're not going up, how do you make ends meet? You have to use credit. The home builder sector, they're in trouble. A Colorado-based credit union is now offering 0% down payment mortgages. Credit Union of Colorado will underwrite the 3% down payment. And Fannie Mae and Freddie Mac mortgage product will cover the remaining 3% of home's cost by giving the buyer an interest-free loan that is repayable at a future date or maybe through refinancing. The bank is charging 0.375% more for the mortgage than the rate for a 3% down payment conforming mortgage. The bank is betting the value of these homes will rise enough to cover the 3% down payment. But will it? Most likely not, because housing prices are now falling. When we look at this whole thing, it's a zero down payment mortgage sponsored by the government. And banks, they're becoming desperate right now because they understand that the pool of borrowers who qualify for mortgages, they're drying up. Why do you think the automobile industry went into the subprime market? The same thing's happening with the housing market. Those who could afford a house, it's drying up. As interest rates move up, people are knocked out, and the only way to bring them back is to lower the interest rates, give them zero down payment, and try to bring them back in. The June employment report continues to show a tight labor market. This is absolutely ridiculous. Remember, there's about 95 million working age people are no longer considered part of the labor force. Basically, what they're saying is they're just not looking for a job. They don't want a job. And they're just saying that, we'll just push them off to the side. They just don't count. Now, this whole idea that we're in this tight labor market and, there's so many job openings and things like that, and we just don't have the qualified people to fill them. This is fake, phony, and false because it is not confirmed by the help wanted advertising. Help wanted advertising is considered an accurate indicator of broad economy. The Conference Board has been tracking help wanted advertising going back to 1919. Formal tracking of help wanted advertising shifted from tracking ads in printed media to tracking help wanted ads online in 2005. The Conference Board help wanted online advertising for June declined by 3.7%. From May was down 2.1% from April. April was down 1.4%. The May and April declines were revised lower in the latest report from the original reports. New ads were down 4.6% in June from June 2017. The total number of ads were down 5.7% year over year for June. The economy is contracting, and the only reason they say there's all these job openings, and this is where they get this from, every company has job recs, where each department says, we have this many openings. We have this many openings. And from upper management, what they normally do is saying, listen, if you're not using these recs, you got to close them out. And departments don't want to do this. So what they do is they say, okay, we're continually interviewing, even though we can't hire people because from upper management, they say we're in a hiring freeze. But they don't want to report that because then the economy doesn't look like it's doing as well as it really is. So right now, what we're seeing is the number that they're putting out there, open recs. It doesn't mean they're going to allow people to fill them. And this is why we see this in the conference board. They're not actually putting out help wanted. They're not saying, hey, we need someone to fill this job. They're just leaving the open rec open, say, yes, we're still interviewing, and they know they will never fill these. So the economy right now is contracting very, very quickly. It has hit a wall already. And when we use other indicators, we can see that what they're putting out there is fake, phony, and false. And very soon, everything is going to change. Think about what's happening right now. The Fed is hiding data. Let's get rid of the yield curve. It's not really a good indicator of what the economy is doing. And we really shouldn't be looking at that. Let's get rid of the balance sheet of the Fed. Let's get rid of that data. We see the mainstream media out there. They're saying that the economy is going to be going into a recession. The Fed is saying that the tariffs might wreck the economy. And we're starting to see a lot of this coming out of the mainstream media. And we really haven't seen this before. Now remember, we've been tracking this since 2008. We've been showing that the economy has not improving. What we've been showing, and there's a reason why we've been doing this, we've been showing that they've built an illusion. And we look through all the numbers, we look through everything they've been doing, and we watched people lose their jobs, we watched stores closed, we watched the bubbles being pumped up in the 20 cities, we watched how they used subprime in the auto industry, we watched how they channel stuffed the auto market. We've been watching all this. We've been watching the corporations buy back their stock, manipulate their books, go into debt, how they manipulated the stock market with central banks around the world buying the tech stocks, especially the Swiss. We've been watching all this, and we've been doing it for a reason. So this time they can't say, hey, it was because of this or because of that. The economy never recovered. The only thing that happened was they created a lot of currency. They propped up the banks, which aren't really propped up. They're insolvent too, because the stress tests are fake. But now we see the corporate media out there, and they're pushing the idea that everything's starting to turn, that the economy doesn't look that great anymore. And this is because of Trump. Now, we said this a year and a half ago. If Trump was elected and he spent some time in office, they were going to say his economic policies have destroyed the economy. Well, he's really done nothing. He's using the same calculations that were there before. The tariffs, they're really not doing anything. I know there's a lot of people out there, oh, the tariffs are still, it's, wrecking the economy. It really hasn't done anything. The economy was already wrecked. Has done nothing to help or destroy the economy. What has been happening here is the economy has been self-destructing. This is what the central banking system does. It doesn't get better. It doesn't, all of a sudden blossom into something that's incredible. It contracts. The debt load gets heavier. People lose their jobs. Retail suffers. Wages decline. They can't raise interest rates because there's too much debt. This is what happens. And the only alternative right now is to turn this around and say the economy's not doing well now. It hasn't been doing well. All these unemployment, GDP, and the rest of the numbers have been fake. And, of course, what you do is you go back in time and then you look at this and say, oh, yeah, look, it was fake. Just like the subprime securities when they said they were AAA back in 2006, 2007, 2008. And, of course, in 2009-10, everyone goes back, hey, by the way, those were never AAA. Those were fake ratings. And it's very easy to go back in time. So what we're seeing right now is the corporate media, they're out there, and they're telling us the economy's not doing well. Barclays published its quarterly global macro survey, which polls over 400 institutional investors from around the world across asset classes, and the very first question revealed was troubling. When asked about their expectations for global growth, Is the economy likely to perform similarly to consensus expectations? And if not, will disappoint or delight? For the first time in at least 4 years, more than half of the respondents responded that a disappointment lies ahead. Yes, they know what's coming. We see out of the San Francisco Fed saying that Trump's tax cut, well, they might be overly optimistic. Well, that was just to push this out a little bit further. It was not going to solve the problem of the economy. It was to keep everything and to keep the illusion going for a little bit longer. Because what we're going to see Trump do now and the Patriots, they're going to start to turn things around, just like the Fed is starting to turn things around and they're starting to point fingers. Now, we need to understand is that the mainstream media, they've been relying on soft survey-based perceptions, skewed by hope and expectations. And, of course, when we look at that, we see that that was rising over the many years. But the hard, real economic data continues to decline. So Bloomberg is out there, and Bloomberg's market recession model, which translates how various asset classes are trading into recession probabilities, now flags the next recession will take place in 12 to 24 months. And they're saying most likely it will hit in the next 12 months rather than in the 24-month time frame. So they think it's going to happen a lot sooner than their model is saying. And once again, what is happening here is they're building a narrative very, very slowly. And we're going to start to see Trump and the Patriots administration start to change his narrative around and talk about how the central bank, the Fed, well, how they are destroying the economy. And we're going to see this probably very, very soon because he's running out of time. And I think he's going to start this up very quickly, maybe even during the summer months or as we approach the fall. And once he starts to do this, this is going to be the battle because the economy, it can't be pushed down the road anymore. We're pretty much done at this point. And we can see that the mainstream media, they're already setting up the narrative. The Fed is already setting up the narrative, and we're going to see the Trump administration start to turn and change its narrative on how the economy is doing, and they're going to start pointing the finger at, most likely, the Fed. And we're going to see this happen very soon. So this system is coming down. We hit the wall. The data that they're throwing at us is absolutely fake, phony, and false, and the system is about to collapse. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.